ننتقل إلى الجلسة الثانية، تطبيقات إدارة المخاطر المؤسسية في أسواق التأمين. اسمحوا لي بأن أرحب بالسيد علاء الزهيري رئيس الجلسة، رئيس الاتحاد المصري للتأمين، المدير العام GIG مصر، والمتحدث الدكتور أحمد الزعبي باحث في التأمين وإدارة المخاطر، الرابطة الوطنية لمفوضي التأمين بالولايات المتحدة الأمريكية. فليتفضلوا لو سمحتوا. سيد علاء والدكتور أحمد. تفضل.
Morning. Today we have a very important and really interesting session. Not because I'm moderating the session, but because we have a really fantastic speaker today. I know that you're all waiting for this, and you're going to really enjoy it. This morning, we're going to talk about risk management. Risk management is a very important subject. The fact that risk management is the process of delivering, assessing, identifying, and mitigating the potential losses or damage that may arise from various sources. These sources and the mitigation of this kind of risk will be addressed today and will be discussed with Dr. Jordan. Dr. Jordan is a very well-known figure in Jordan and in US, and I'm going to give you a small brief on his bio. So Dr. Jordan Al-Zu'bi is an insurance economist specialized in healthcare insurance, economics, insurance fraud, insurtech, and climate change financial risk. Dr. Zu'bi is the first Jordanian and the second Arab to earn a PhD degree in risk management and insurance from a prestigious universities in the US. He has a lot of researches, and Dr. Zu'bi has been working on multiple projects and presented the results of his work at 25 domestic and international conferences in the US and Australia over the last years. Dr. Zu'bi is currently a visiting scholar at Emory University and a professor at National Taiwan University. His research interests included behavioral insurance, insurance economics, retirement planning, and insurance fraud. Without further ado, I'd like to welcome Dr. Zu'bi to start his presentation. Yes.
Good morning, everybody. Thank you so much for introducing me. Do you have portable? Yeah. Thank you so much for introducing me. It's actually an honor to be here. This is by far the second conference I attend in the Middle East. As he said, over the last few years, I've been more involved in the US and in Europe and in Australia. I found myself stuck there, but I decided over the last 2 years to be more involved in the Middle East. I want first to thank Jordan Insurance Federation for extending me an invitation and flying me out to attend this conference. I sincerely appreciate that. As a Jordanian economist, I feel proud by the arrangement that has been done via GIF, and everybody who was included and is still included in this great event. I would say, I attend each year on average 8 conferences, and over the last 10 years, I attended more than a lot of conferences, let me put it this way. This conference by far is the best conference I have attended in my life. Seriously, the vibes, everything, networking is amazing. And you guys saw yesterday, I was going crazy, I was dancing. I have not did dabke for the last 13 years, so I could not help it. So I was dancing and doing dabke. My heart is still doing dabke anyway. Thank you, GIF, for having me. And let me start my presentation. As you can see, I'm going to give you a presentation about the economics of enterprise risk management. And I will give you some applications to insurance market. Now, usually when I do consultation or I teach MBA students or I work with my colleagues at the NAIC, I treat them as economists. For me, each one of you is an economist, whether you are in the industry or academia, whatever. I always tell them this have to grow and trees inside you. So today I'm going to treat you as an economist, and if you have any question along the road, please feel free to ask. This is my LinkedIn. If you have any questions along the road, also you can reach out via LinkedIn anytime. Okay, very quick, I will give you a little bit of background. Introduction about enterprise risk management. Then I will give you what factors could potentially affect enterprise risk management adoption across continents. I would also give you the economic implications of enterprise risk management. And then I will give you some applications of enterprise risk management and some real life examples of more in the US about ARM. And finally, some takeaways and conclusion if I ended up having a little bit of more time. Okay? So if I want to define enterprise risk management, it's basically a holistic way of managing risk in which you integrate risk management into your overall organization strategic decision-making process. I always say, you need to think of identifying potential risk, then evaluating them and their likelihood, and then developing whatever strategies comes your head or way to manage them. You can see this definition is by one of our respected insurance economists in the US. His big name, one of them is German and the second one is Chinese. So for me, enterprise risk management is like umbrella. You need to address every single risk and go back to ARM. Back in the day, we used to evaluate risk, separately across departments, but this type of risk management doesn't work effectively. So when we coordinate across departments, as I said, we would have a more holistic view of the risk that faces your organization. Then you can come up with more rational decisions and tools to mitigate such risks. So the goal is, beside enhance your financial performance, for me is to improve efficiency, and it's all about confidence and trust. So enterprise risk management enhance confidence and trust in your organization, not only by your clients, but also by your peers and competitors and the whole industry. So we have we all know AM Best. AM Best evaluate the financial strength of each institution, insurance company. So we have a proxy score for enterprise risk management adoption. Okay, and this score is assigned by AM Best to evaluate every single insurer's capabilities based on their risk management policies and practices. So if you look at the research, at what economists have done, we have found that higher enterprise risk management score is associated with higher financial strength. So you need to take it very seriously as it does enhance your credibility also in the market. So here are some of the, if you search Factiva News or some other reports published by any company, if you see any of those are proxies of enterprise risk management, especially chief risk officer. So if you see chief risk officer in every single institution, that means they have adopted enterprise risk management. So those are the proxies mainly we use when we do research. We try to find which is which. We search on Factiva News and AM Best, and we try to collect the list of companies that have adopted enterprise risk management. And then we do difference in difference. We try to see pre and post, and to what extent the adoption has affected their financial performance. Okay, so it's all about data anyway. Like we work closely also with actuaries. So without data, we can do nothing all the time. Here are the most prominent risks that we are facing today based on Alliance in 2022. So you can see cyber attacks are very crucial ones. Business interruption, I would say business interruption is correlated with the cyber attacks, but it's a very serious issue that we are facing today in the insurance industry. Catastrophes, pandemic, of course, we have all suffered from COVID-19, and we transitioned from working in place to virtual or work at home, which also has increased cyber attacks. There is a correlation also here. We're talking about change in regulations. I would say this is very important. Me working at the NAIC, we create model laws for every single issue in the US insurance industry, and we work closely with the state insurance department to address them. So when you come up with a new regulation, it has spillover effect, whether it's a new regulation or you make changes. And these changes would affect states, or would affect countries in the Middle East differently. I give you my experience in the US. In the US, politics is involved. We have red states, which is dominated by Republicans, like Donald Trump, and we have Democrats, like Biden and Kamala Harris or Obama. So usually, red states are less responsive to any regulation. Okay, they are less likely, for instance, to adopt enterprise risk management, because each one of them has their political agenda. Republicans, for instance, when it comes to regulation, they care more about businessmen. They don't care about people to a large extent. But in blue states like California and New York, they care about policyholders. Now, I don't agree with any of them, because me as a regulator, I need to act as a double agent. I need to protect the policyholder and I need to protect the insurance company. But the politics involved in the US is crazy, each party put their party ahead of the people, not the people ahead of them. Okay, and the last one I'm going to talk about is climate change and how we can potentially use enterprise risk management to kind of mitigate the potential effect of climate change. Okay, here is some quotes about enterprise risk management, and this would tell you how important is enterprise risk management. For instance, you can see here, highlighted by yellow, the future of risk management lies in the integration of risk management into strategic decision making, and risk management provides a framework for achieving this integration. And there is a few more. I leave them for you. I will be sharing these slides with you anyway. Okay, here's some statistics about enterprise risk management adoptions over continents. You can see in North America, our statistics based on 2020 shows that roughly 75% of insurers in the US have adopted enterprise risk management. Again, in the US, we require insurers to, especially blue states, they have a strict regulation working closely with us to have every single insurer to adopt enterprise risk management. However, in red states, Republicans, they don't care. Like, we try to convince them, we create these model laws, we propose them, we work closely with them, but at the end of the day, like, we cannot force them unless it's a federal thing. But our institution is not federal, so we cannot technically force them. So this is in North America. You can see in Latin America, almost in 2021, they are way behind the US. 33% have adopted enterprise risk management. In Europe always ahead of the US. Like, they are more like blue, let me put it this way. 80% of the insurers in Europe have adopted enterprise risk management. Middle East, us and Africa, MENA, about 48% in 2020. And Asia Pacific, about 47% of insurers have adopted enterprise risk management. Now you can see that we in the Middle East, Latin America, mainly we are behind Latin America and, we are behind Europe and North America. And I always tell when I do consultation, like, sometimes people reach out to me, they're having issue. Like, every single issue you have here in the Middle East, we have already addressed it in the US. Because we have 52 states. Each state has their own state insurance departments, and we work closely with them. So sometimes, like, I do consultation within 2 hours, I just write a report and I tell them what to do and what not to do. But here we are way behind, like, seriously, like, way behind. Last summer I met Dr. Adil Al-Sharkas. We talked about issues in the Jordanian insurance market. One of them is auto insurance. Like, the main thing of auto insurance is not applied in the Jordanian insurance market, underwriting, which is crazy, you know, like, they kind of have tiers. You have a customer, this customer for you, this customer for me, without underwriting, this is a violation of insurance. Like, I don't know how they still do it, but I'm hoping they would make changes and take it more seriously. Now, over years, enterprise risk management adoption has increased. So I'm going to show you the growth rate. Is it? No, I think I moved a little bit. So you can see, sorry. No. So you can see in North America between 2009 and 2020, the adoption rate increased from 15% to 75%. Same in Europe in 2018, from 45% to 80%. In Latin America, 10% to 33%. Same applies in the Middle East. So you can see significant growth in enterprise risk management adoption over year, which is a good sign. Yes, we are behind, I always say, but we are in the right track. We are taking enterprise risk management more seriously. And regulators in the Middle East and North Africa are also trying to come up with, regulation to have insurers adopt or have risk management departments within their institutions. So this is good news. Now, since we have seen this significant growth, you might wonder, like, why would insurers spend so much money and resources and training to put regulation on the side? Okay, regulation, I kind of tell you, you take it or you leave it. You have to adopt it. But some insurers voluntarily choose to adopt it. So the question is, what value does enterprise risk management, do for them? And before I answer this question, I want to kind of go through what factors could potentially influence, your decision to adopt enterprise risk management. Now, before that, like, there's a lot of regulation, as I said, about enterprise risk management adoption. In the US, again, NAIC, we create model laws. We are like tailors, and to create laws, they hire a lot of PhDs who have full understanding of every single issue and do a lot of research on every single issue in the US insurance market. Okay, we work sometimes closely with the Canadian insurance market. So we create, again, model laws we created laws for enterprise risk management, and then we follow it up with something we call it ORSA to enhance the value of enterprise risk management. But ORSA is only applied for insurers who assume premium more than 500 million. But still, like the one who make less than 500 million, they still need to do enterprise risk management. Again, there is variation across states. So here in the US, I forget the other slides. I figured it out earlier about other continents. But I would tell you pretty much in the Middle East, today a lot of central banks and insurance units are taking enterprise risk management very seriously, and they are working with their insurers to make this happen. Okay? So as for factors could potentially affect enterprise risk management adoption, here's some of the research that has been conducted by some of my colleagues, and I had the honor to work with some of them. So if I want to summarize it, the regulation is one factor. As I said, states who happens to be heavily regulated are more likely to adopt enterprise risk management. This is blue versus red, as I stated earlier. Republican, like Donald Trump, for instance, when he was a president, he never cared about such regulation. So they tried to reach out to his office, but he never supported it. But Democrats, they always support anything that, enhance the value of the market and protect policyholders. So their argument is that enterprise risk management will, yes, strengthen the financial position of insurer, but this would reflect positively in policyholders, which is win-win for everybody anyway. The second one is industry. I would tell you industries who happens to be heavily or facing significant risks are more likely to adopt enterprise risk management, like finance, insurance, our industry, or healthcare. Those ones tend to adopt enterprise risk management. And we have organizational culture. Organizational culture is shaped by the CEO culture, and it's all about risk perception. So the CEOs who happens to be more risk averse, we call it, are more likely to adopt enterprise risk management. However, the ones who are risk seekers are less likely to adopt enterprise risk management. I will give you a little bit more details in a minute. Of course, the size of organization, this is everywhere. Larger insurers are more likely to adopt enterprise risk management because it's costly, so they have the resources. Also, from our experience in the US, large institutions in the US tend to have research and development departments. Small insurers don't. They do spend a lot of money on research using their data, and it would help them to inform their investment strategy, which is, I always provide recommendation that each institution should have research and development. It's very important. Yes, it would cost you some money, but trust me, it would add a lot of value to your company. Perception of risk, of course, is very important. I would tell you, some organization or countries may view risks differently when it comes to enterprise risk management and whether to adopt it or not. Currently at the NAIC, we're trying to understand risk perception by CEOs or individuals or whatever, you name it. So one of the projects that I currently work on it is how the behavior of risk averse or risk lovers, CEOs within the firm, can actually explain, for instance, corporate demand or catastrophic demand for insurance. Why would you demand catastrophic insurance or cyber insurance, and another company who pretty much similar size, similar financial position don't? So there's a variation in the US. We try to understand what factors could potentially shape the risk perception of every single institution. One more thing, we also look at whether CEOs of firms treat catastrophic risk, low probability, high severity type of risk, very differently compared to non-catastrophic risk. This also would give you an idea how they, think and receive risk differently. So this is basically the type of research that we do to understand perception of risk and how it influences enterprise risk management adoption along the road. Of course, education and awareness. CEOs or any company that have or value enterprise risk management, or let me put it this way, risk management, or they have a larger background of risk management, are more likely to adopt it. Again, it goes back to risk or financial literacy. Same here, if you are more financial literate, you are more likely to do better compared to the ones who don't. And economic factors, I don't need to explain it. You know, we are undeveloped countries here compared to developed countries. Developed countries, insurers, like who happens to operate in developed countries, are more likely to adopt enterprise risk management. And this is very interesting. I do a lot of behavioral work. I try to understand to what extent, for instance, your culture, value, characteristics influence your economic behavior. One of the work we do is CEO characteristics. So this is similar to the risk literacy, the first one. CEOs with higher tenure and background in risk management and insurance, of course, are more likely to adopt risk management and insurance. We have something we call it the behavioral biases, like overconfidence. You don't want to hire an overconfident CEO, because like overconfidence in business, it doesn't go away. So overconfident CEOs lead to lower enterprise risk management adoption, because they think they are pretty good, they can manage any type of risk, and they don't need this type of department within their institution. So overconfidence harm your business. You need to be rational. You need to be an economist. You need to do cost-benefit analysis. And I always tell my colleagues, when you are in business, you cannot be emotional. You cannot just follow your emotions. You need to it's all about data. It's all about trend. It's all about correlation across businesses. Like cyber pandemic, like affected every single, for instance, risk we have seen over the last few years. Okay, we have culture. Okay, this is something about CEOs' characteristics. Firms that lead by immigrant CEOs have higher enterprise risk management adoption, because when I immigrated to the US, I still have this uncertainty avoidance, like the way I was raised in Jerash. I'm from Jerash. Like, it's different, than somebody who's not or live somewhere else. Marital status, single CEOs tend to take more risk. This doesn't actually work for older CEOs, and more likely to adopt enterprise risk management. CEOs with pilot license are more likely to adopt enterprise risk management. And this is very interesting for me, and they are less likely to adopt enterprise risk management if they do risky activities such as skydiving and bungee jumping. So there's a lot of research suggesting that if you do skydiving or bungee jumping, you are a risk lover. Okay, you love risk, you invest in cryptocurrency, you love volatility, in other words. And this is also very important. CEOs experience earthquakes, volcanoes, tsunamis, and flood. Any natural disasters are more likely to adopt enterprise risk management, assuming that there is no serious damage there. But if there's assuming there is a serious damage, but if there is no serious damage, they are less likely to adopt enterprise risk management. And of course, board characteristics. I would say more diverse board within each company are more likely to adopt enterprise risk management. And here, for instance, board with more women or female leaders involved in their company are more likely to adopt enterprise risk management. So I will talk about diversity, equity, inclusion, and how it's related to enterprise risk management. We need more leaders, women leaders in the insurance industry. And I take this very seriously. I was hired at the NAIC to be in charge with the diversity, equity, inclusion, and discrimination in the US insurance market. And I go crazy with it, because I was discriminated against back in the day. Discrimination is red line, no discrimination. And equal pay, no gender gap between men and women, also I take it very seriously. 10 years from now, I always make a joke for my mom. I will become the Prime Minister of Jordan. This will be the first thing to do in my agenda. Like 50% of the senior management should be women or have to be women in every single company in Jordan. So I will force for that. I will come up with a model law like I do in the US to make this happen. So, yeah, 80%. That equal, equal is good. All right, so with that being said, I'm going to talk about the economic implication of enterprise risk management. Am I doing well with the time, Mr. Alaa? Yeah, we have 20 minutes. Okay, yeah, I will try. So when we talk about the economic implication of enterprise risk management, you can see that enterprise risk management can help insurers to lower their cost of capital, and this would translate into a better financial performance. There's a lot of research. Dr. Chu, he's a Chinese professor. He was affiliated with UCLA. Back in the day, I volunteered to work for him when I moved to the US. I needed recommendation to do my PhD. I knocked his door. I told him, I need a recommendation letter. I want to work for you for free. And I worked for him. He's a very respected economist. I learned a lot from him. He does a lot of work. And I worked with him back in the day in many projects about enterprise risk management. So he's my godfather, I would say. Without him, I would not get scholarship. I got 5 scholarships from the US government. He was he had a lot of connection. So I always feel thankful for him. So he did a lot of research, and they provided evidences that enterprise risk management is associated, as I said, with lower cost of capital for insurers, and we measure this by cost of equity. Okay, and there is some also research supporting his finding. So I leave this for you. We have also Grace, also one of the respected insurance economists in the US. He provided evidences that enterprise risk management is associated with reduced underwriting and investment risk. So if you have enterprise risk management, you are likely to do well with underwriting and investment risk compared to the one who don't. Also, we have Elling. He's a European insurance economist. He provided evidences that insurers with high score or higher score of enterprise risk management had lower volatility when it comes to their earnings. Also, insurers with higher enterprise risk management scores had lower underwriting, similar to the and asset risk. I'm going to summarize this very quick. You can see when it comes to the economics of enterprise risk management, pretty much from my experience, I would say most insurance economists are on a common ground believing that enterprise risk management would add value to your institution. Now, we sometimes say small insurers would basically have a hard time to adopt it. We understand. But I think it's worth the investment. It would cost you, yes, money, it would cost you time, it would cost you training, but it's worth it. So if you are a small or still, growing insurer, please consider adopting enterprise risk management. And I know here at the Central Bank of Jordan, last summer I met again with the Dr. Sharkas. We talked about, I think they have some regulation right now to require insurers in Jordan to have risk management and insurance department. And also to hire actuaries. I'm not sure if they have implemented it yet or not, but they are on the track to do so, which is good. Actuaries, we always say in the US, insurance economists are the brain and actuaries are the muscles. We work closely together. So I think every single insurance company needs to hire a few actuaries, not just 1 or 2. They do a pretty good job. Okay. So when it comes to, again, to enterprise risk management, it would improve underwriting, reduce claim cost. When it comes to claim cost, we're talking about it would help you to identify insurance fraud. So you would not be paying fraudulent claims. And if you pay less claims, you make more money, right? It would enhance your financial position. And the fraud is a very serious issue, even in the US, but I would tell you is a crazy issue in the Middle East. Because here, we have connection families, there is different. We still have fraud in the US, especially healthcare fraud. I will talk a little bit about it, but this fraud in the Middle East is especially auto insurance in Jordan. I discussed this with some regulators. It is a very serious issue. We're talking about, of course, as I said, you have a better investment management, enhanced financial stability, of course, customer satisfaction. It would really reflect on your policyholders' experience and satisfaction. I will leave this also. Enterprise risk management also would mitigate the risk of directors and officers for any institution. So I don't have time, maybe I will skip it, but in general, enterprise risk management help organization mitigate directors and officers' liability risk. Okay, and here's some empirical evidence of the directors and officers' liability risk. I would also hear some additional research that my colleagues have done, so I leave it for you. Okay, this is, I will put more time here. Here's the application of enterprise risk management. So when we talk about enterprise risk management, it would help you address issues that you face pretty much every day. Today, we have telematics and self-driving car. So the question is how enterprise risk management would help you to address issues with telematics and self-driving car. Healthcare insurance industry, when it comes to insurance fraud, is so big, so big. I cannot emphasize how big it is in the US. Climate risk, ECG, we're talking about cyber insurance, cyber risk. It's like enterprise risk management would help you mitigate such types of risks. Global pandemics and insurance technology, InsurTech, also it's very significant when it comes to enterprise risk management. Very quick, here's a little bit of background about autonomous or self-driving cars. According to the KPMG study, they are predicting that self-driving cars may become commercial reality in the next 5 years. 75% of the cars on the roads in the world will be autonomous by 2040. So this would be a new market for you as insurers. And what type of risk comes with such type of cars? You need to consider that. You need to be a leader in your industry and start thinking and developing strategies to expand your market share in this types of cars. Especially in Gulf areas. I would tell you today, United Arab Emirates, Qatar, Saudi Arabia, Bahrain, you would see a lot of more self-driving cars there. But maybe in Jordan and some other countries, we are still a bit behind. We are not as financially stable to drive such cars. But I will give you some more details about them. Also, Google believes that self-driving cars can make driving more efficient and safer by eliminating distracted driving and other human errors. And according to our study at the NAIC, the adoption of autonomous cars technology could reduce the frequency of accidents by almost 90%. This is today you would see a lot of autonomous cars in the US. And currently we're working on regulation to mitigate such type of risk and to address them. More protecting also the policyholders and make sure that the insurers are addressing them very well. So as I said, enterprise risk management enhance your role as a central bank or insurance unit and you as insurance companies to address the issues that comes with autonomous car or cars before they hit the road. Okay? For example, you need to think about via enterprise risk management, when you have this department, what happens if a self-driving car gets into accident? Now, who's liable? Who's at fault for the damage? Will you be, as a human, at fault, or will the car manufacturer be at fault? Who's at fault? If you want to do underwriting, you need to answer these questions, right? Now, California usually leads blue states with regulation. So they're currently working on this, and they come up with regulations stating that it's not in effect yet. They're stating that if you have a car accident with your autonomous car over, let's say, the first 5 or 10 years, it would be the manufacturer fault as long as you are awake or you are not drunk as a driver. but they require you to be awake all the time. And this is will take me to the next question. Would you require the driver to maintain a constant vigil or stay awake on the road all the time? So you buy autonomous car to relax, to make your life easy. Why do you require me to stay awake all the time? I could sleep, I could take a nap, I could read a book. So in California, they require you to stay awake. You are not allowed to drink. You are required to have a license, to, even to drive your autonomous car. Not to drive, it would drive you anyway. And again, what is allowed to do inside the car, as I said, whether you can read book or, so all of these questions need to be answered in Jordan or in the MENA area if you want to insure such cars. And again, like if you start from now, like you can be a leader and you can expand your market share of insuring such cars. Now in Jordan, I don't know whether it would be tiers. This time this company insured this car, the next time the next company, I don't know how they will deal with it, but I would recommend for the Jordanian insurance, the Jordanian Central Bank to consider underwriting in the Jordanian auto insurance market. And the last question is like a thing that you need to consider, will they need a driver's license, as I say. Again, like in the blue states, they do require you to have a license. And here's like the main variables we have to basically do underwriting, right, when it comes to auto insurance. Now, you need to think what else we need to insure autonomous car. Do we need, for instance, credit history, drivers? Like there's a lot of like research suggesting that maybe yes. There's a lot of research like showing from my colleagues showing that low credit scores have high risk profile. So if you live in the US and you have a low credit score, you pay a higher premium anyway. And if you want to buy autonomous car, you will be they would require you to have a higher credit score. Part of it because like maybe you would misuse this autonomous car, maybe you get drunk, maybe you harm others. So they take this very seriously. But one of the main concerns about it is discrimination. Like as a person who does discrimination in the US, discrimination again is a huge issue in the US. They still do discriminate based on zip code, based on the other variables. How am I doing with time? 5 minutes? Okay, I will skip this. This is some issues related to implication of telematics, like related to data collection and processing technology, need for claim management and so on. So I leave this for you. So when it comes to enterprise risk management and diversity, equity, inclusion, I would tell you the NAIC identifies gender diversity as a criterion for better enterprise risk management score. So we have also our enterprise risk management score, different than the one at AM Best. So we calculate it based on the data we have and the financial performance of the companies and what they do and what they don't do. So according to what we do, like companies with more women involved in leadership positions, especially enterprise risk management, tend to have better financial performance and less financial misconduct. Now this is funny, there's a lot of research suggesting that men are more likely to commit fraud. And there is a correlation between men and dishonesty. I'm sorry to tell you that, but this is a fact. Like in the US and even European insurance or financial market. Men, part of it, men are risk lovers. They tend to commit a fraud. They don't care about the consequences compared to women. And they think that the probability of getting caught is slim. But women are more risk averse, more rational, okay? So it's very important to promote diversity and inclusion in the US, or not in the US, in our insurance market. Now here's, you can see I was happy to see the 100 most powerful businesswomen, I think a couple months ago, if I recall right. And you can see we have Dr. Manal Jarrar. Actually, we have 4 of them. Congratulations, Dr. Jarrar. She's one of our insurance leaders, and I will have to say I had the honor to meet Dr. Jarrar last summer. She had me in her office, and I think I strongly believe, actually, we need more women like Dr. Jarrar to be involved with our insurance industry, not at the MENA level, but at the international level. She knows what she's doing, and I feel like she's also a leader. So if you also read, even in the US, we still have a little bit of this issue. Across insurance line, whether they are life, home, auto insurance, gender diversity, like they are doing well with gender diversity, but like racial diversity is not well established in the US. They still discriminate against Latinos. They still discriminate against African American. Arabs were good, actually, in the US. We are labeled, classified as white, according to the federal institution in the US. So I am white. I always tell them I am not white, I am Arab. But when you kind of fill out any application like the HR, they classify you as white. So when I apply for a job, sometimes like white, I'm doing good compared, which I'm not saying it's good, but it's bad. But they do really discriminate against Latinos, Asian, and African American, like still, even at blue states, like you still see some discrimination. So here's the thing why we also believe that we need more women involved in our insurance industry. Women, basically, according to our research, are highly loyal to their companies. Women tend to stay longer at your company, okay, compared to men. And women leaders actually tend to care about their employees, their well-being, and make sure they have the right workload compared to men. Men, they don't care. They just want you to like a machine, like to work like a machine. This is like a research, not me, don't get me wrong. But this is a fact in the US. So they prefer a lot of the time, and the economists all the time suggest that we need to see more women again involved in the MENA insurance industry. And I hope, and like I want to salute every single woman here, and whether she's in the insurance industry or not, and I hope to see each one of you at a more senior positions along the road. This is when it comes, yes, 2 more minutes. This is very quick. I will tell you enterprise risk management would help you to address insurance fraud. Here's some like very quick background. Insurance fraud is unique because basically you cannot, as a policyholder, usually is committed when it comes to auto insurance or homeowner insurance. Fraud is committed by me or you. But in healthcare insurance is largely committed by healthcare providers. One reason of it, you cannot, as a policyholder or as a patient, file a claim without an action of healthcare provider, which means you need to get sick, go see a medical doctor, get a prescription, and then a claim can be filed, unlike auto insurance or homeowner insurance. And this mitigates the fraud rate among policyholders or patients in the health insurance market. But at the same time, it gives healthcare providers more opportunities to misuse your insurance. They don't only provide unneeded services. They always give you unneeded services, but also they file the claim in your behalf. And they do what we call it, and also this is like a little bit of statistics. In the US, we spend 3.5 trillion, like I want to roll R's, I roll R's, trillion, not billion, 3.5 trillion US dollars in healthcare spending. Imagine like how much fraudulent claims out there. So upcoding, this is a very serious issue in the US. I'm not sure if it's prominent here in the Middle East. So they do something, we call it upcoding, which every single disease is like ICD-9 or ICD-9-10, but it's a bit different. Each disease has a code and is priced. So you go to a medical doctor, and let's say people are not medical doctors, they don't understand the utilization report, and they don't check it because of the moral hazard. So they do upcoding. They change this code to a more intensive and expensive code. So you go, it should be 100, let's say, assume the code that worth 200 US dollars, then they change it to 201. Then it would cost now, let's say, 300 US dollars. And this is a huge loss in the US. And currently we are developing artificial intelligence models to fight this type of fraud. Again, also like the transition, also this is a huge fraud rate in the US, the transition from ICD-9 to ICD-9-10 was a serious issue in the US. We have seen a lot of fraud. It's increased by actually 20%. Because like medical doctor were able and are capable to understand the new code system and the transition, but the insurance company are not. So I always say you need to hire the most qualified person, and you need to have an effective enterprise risk management to make sure that such activities are not there. At the end of the day, yes, you spend more money again, but it's worth it. It's like if you want to do cost-benefit analysis, it's worth every single penny of it. And I would stop here, but it has a lot of application on cyber risk, insurtech, and so on. Thank you so much. And I was hoping I like to walk when I present. I'm not myself, actually. I'm a person who like to walk when I present, but they didn't give me a mic that I can move. But thank you so much for your attention. And if you have any question, again, let me go back very quick. This is something that you would see. I think is, yep, here what you mean. But feel free to reach out anytime. This is my LinkedIn. I will be very happy to support you or to give you any detailed answer of any questions you have in your mind. Thank you so much.
Well, thank you very much, Dr. Jordan. I think it was very useful, and unfortunately the time was not really enough to have all the information that in the presentation, but I believe that all of us has benefited from this very thorough presentation. We have 5 minutes for questions. If anyone has a question, please let me know.
Thank you so much for the informative presentation. Actually, my question is related to AI and whether you believe that AI would be a risk in the financial sector in general or to the insurance industry in specific, or even potential risk. And if yes, what would be the best mitigants that insurance companies can start to work on it? Thank you.
Actually, this is a good question. We're currently working on models for artificial intelligence, and if I want to say it in Arabic, it's like safe ذو حدين. It can be a risk, it can be a cost, and it has also significant benefits to the whole insurance industry, even banking and finance. Now, when it comes to risk, one thing about artificial intelligence, unfortunately, is discriminating against people, believe me or not. So we have models, and we have issues in the insurance industry. We created this AI, and we asked them, for instance, to create a medical network in the US, because I do a lot of healthcare insurance work. So medical network, there is large medical network, and there is small medical network. And when we run this artificial intelligence model, we found that this model creating large medical network for areas that have high ratios of white people. But it gives us small medical network for areas that have high ratios of Latin American and African American. And this is itself discrimination. And then we say maybe the model itself is wrong, or we have bias in data. And we double check, we had no bias in data. Like the data was like correct, and we have no issue with the data. But I'm not sure how it happens. We try to figure out like what's going on here. But artificial intelligence could be basically like cause issues like discrimination and privacy issue and so on. But when it comes to benefits, it has a huge benefits. It would help you with identifying insurance fraud. It would help you in your investment decisions. It would help you in underwriting risk and so on. It would really add a lot of value to your company if it's applied correctly. But to do so, you need to hire data analytics. You need to have insurance economists. And I always say every single insurance company needs to hire insurance economists. Now, the Central Bank of Jordan today, they are requiring insurance companies, I'm not sure, to have like risk management and insurance and actuaries. But in the US, they have to have economists, like PhDs. Like they do this type because they know what the heck is going on in the market. And, you know, like we are trained to do that, like everything you think of, you know, we can do it, including artificial intelligence and other type of work. But that's a good question. Yes, it has. Currently, we don't have a kind of a solid answer whether the benefits outweigh the cost, especially at the NAIC. But, you know, we're hoping that we can overcome the cost to make use of artificial intelligence. I hope that was an answer for your question. Yeah, thank you.
Any other questions on the floor? If not, so let's conclude this very important session that risk management is not really an option. It's a must now, and it's not so luxurious. We have all to have it, and I believe that if a company that not really believe in risk management, this is going to really affect their bottom line directly. So I believe that we all have to work very hard in order to have a risk management department in our companies. And I was very glad to see that in the Middle East, it's 48% of the insurance companies. Actually, I was under the impression it's less than this. So we have a room to go, but it's really a positive thing. Once again, I'd like to thank Dr. Jordan Al-Zu'bi for his thorough presentation, and please share with me a big applause for him. Thank you very much.
Thank you so much. Thank you for having me. Thank you.
شكرا للسيد علاء الزهيري رئيس الاتحاد المصري للتأمين المدير العام GIG، والدكتور جوردن الزعبي باحث في التأمين وإدارة المخاطر الرابطة الوطنية لمفوضي التأمين بالولايات المتحدة الأمريكية. ندعو المهندس ماجد سميرات رئيس الاتحاد الأردني للتأمين لتكريم رؤساء الجلسات والمتحدثين، كما أدعو السيد رأفت حماد إذا موجود معنا في القاعة، والأستاذ سميح جحا. نور موجودين بليز؟ أوكي تفضل مهندس. يس. شكرا. والأستاذ رأفت انضم لنا. شكرا للمهندس ماجد. ندعوكم